Good morning, it's Jeffrey Cohen. How are you? Today's Wednesday, June 29th. We're here to talk to you about the financial markets. I had a whole plan this morning. We're going to go through a demo of the model outputs, both the written report as well as the spreadsheet. We may cover a little bit of that. I just want to talk about the markets a little bit today. There's a lot going on, and I think yesterday took a lot of people by surprise, and so I want to talk about it. So we spoke yesterday, and it was crazy how much we did. We wrote a blog, and we kept updating it over and over in our research section called Today's Insights. A bear market intermediate rally, don't believe it. And so I talked about how expected returns have to go up given our market. When expected returns in the future have to go up, it means the price of the stocks today have to go down. The currency markets are boiling. Long-term interest rates are up. We even shared our own personal investments so you see where we have our money out there. And then I give updates on Bank of Hawaii and Lakeland Financial Corp, which is Lake City Bank in Warsaw, Wisconsin. What I didn't realize is that Hawaii's housing prices are up 4.3% for 3 months. They're up almost 23% this year. And they're up 59% over 5 years. Indiana has actually better housing appreciation over 5 years, 61%. Housing prices are up almost 16% this year and up 3.5% this quarter. So now I'm reading a new book called The Subprime Crisis. And so what I realize is it's going to be really hard to afford a mortgage, to buy a house and afford a mortgage. And I'm not sure how anyone's going to be able to do it. And what that means then is I don't know how anyone is going to be able to buy and stay in a house. So now we get to the point where we're going to have defaults going up and things like that. And it's worth talking about now when it happened, not 3 years from now, right? I guess we could write a book about it 3 years from now, but let's try to get ahead of it. So according to consumerfinance.gov, and that's a government website, a well-qualified buyer with a really good credit score buying a $500,000 house, which is about the average now. Can't believe that. And they put 20% down for a 30-year fixed rate conventional loan, a conforming loan. The lowest price offered is 5.25. The median is 6 1/8, and the highest price is 6.5. So we checked. And we saw that out of Warsaw, Indiana. Lakeland Financial will give you a fixed rate mortgage for 6 1/8. It's interesting, right? So it's interesting because, I'm sorry, that was the best rate online from Blue Spot Home Loans. Then you've got Lake City Bank, which is offering an APR of 6.105. Or 6.033 with no points in another area. Just it was interesting. And then you try to get into compare mortgages, and I realize Hawaii does not have very many mortgage providers. There's only one mortgage available online from Loan Depot. By the way, Loan Depot is one of the stocks our model used to pick. Has an APR of 5.22, almost 2 points, and fees of $7,219. But you can only get it for 15 years. Bankrate, which is a data provider that we use, doesn't have any mortgages available. Bank of Hawaii offers a 5.305% APR with 2 points. So on a $500,000 house with 20% down, so you put $100,000 down, you have to pay another $8,000 in points. at closing. So for the 30-year loan, the maximum loan amount is $970,800, and these are not fixed rates, just a calculator used today. And then you have to create an account with Simply Fee in order to find out what your planning rate would be. So just walking in, assuming you have really good credit, I'm assuming, it's $22.24 a month. Or it's $2,400 a month, right? If you didn't want to pay the $8,000 up front. It takes 44 months to break even. So I don't know why they would do that. Why is Bank of Hawaii making you pay 2 points? Why is the other one, Loan Depot, these do not seem like good prime A mortgages. These seem like subprime mortgages. So why are you offering subprime mortgages on your website? And why are you offering weird stuff like 20% down with 2 points? Who has $8,000 in addition to $100,000 when they buy a house? So it seems that Bank of Hawaii charges more for mortgages. So the question I have is, so houses in Hawaii are up like 25% this year, and they're up like 60% in 5 years. I don't know anyone whose income is going up who has a normal job, teacher, fireman, whatever, office worker, that's making 60% more in 5 years, unless they changed careers or they went back to school, something. And it's not just the house, the mortgage that went up, the property taxes go up. The PMI, or the mortgage insurance, goes up. Also, the home cost operate the home goes up. Our electricity, everything's more expensive now in the home. And of course, everything that we buy in the home is more expensive. So you figure a $2,400 mortgage payment, you figure property tax, another $1,000 to $2,000, plus property insurance, plus the cost operating the home. It's easy $5,000 a month. So can people really afford that? And this is on a fixed rate mortgage. Nothing weird with arms and adjustables. So that's fine. So I think this is going to change things. I think people are going to buy fewer homes. And I really hope we don't have a subprime mortgage crisis again. Because this is the time when it starts, right? When houses are worth more. Oh, I just made 25% on my house. No, that's like saying you made 25% on Bitcoin because it went up for a week. No, you only make it if you sell it. And with houses, you don't sell it. You live in it, right? And so it's kind of like having a nice car and somebody tells you, hey, your car's worth more. Great, I'm still driving it. I got to go to work. So everyone knows who watches social media that mortgage rates are above 5%. In fact, are above 6% for the first time in a very long time. 11 years since they've been above 5%. And this is going to slow things down. So this is what the Fed, which is the Federal Reserve Bank, St. Louis, publishes. These are 30-year rate mortgage averages. So average mortgages that were taken are now up above 5%. They haven't been above 5% right here since 2011. Okay. So that's the context we have, which is housing is going to slow. Which means, where's the chart? Here we go, the chart. I love this chart. So retailers, retail. Costco, Dollar General, those guys were down a little. Amazon was down a lot. Home Depot was down. Lowe's. So these are the stocks that are not going to do so well, right? Amazon, Lowe's, Home Depot, fixer-up kind of places, appliance makers, construction, contractors, they're all going to be pretty weak. So it's interesting to see that yesterday. They were between 4 and 6% down in one day. So, okay. So mortgage is looking a little crazy right now. I got it. So what else? So update 2. So the market rose initially. See, it popped up and then it came down. And it came down relentlessly throughout the day. It did at lunchtime. It looks like people, seems like people left for lunch and started trading stocks. And at the end of lunch, they made a few bucks. They paid for lunch and then they sold everything and then it dropped back down again. I swear to God, that's what this looks like. This looks like a lunch hour, a nooner, where instead of, going out and having a drink, you're going to your car and you're trading stocks off your phone. My guess is if we look what went up, it was probably the kind of stocks that people like to speculate in. It's just a guess, though. And then flat through the rest of the day. And this is what shook me. The NASDAQ 100, NASDAQ Composite 100, which is the top 100 tech stocks in the United States, was down 2.5% on an initial up day. So maybe it was up 0.5%. So it swung almost 3% a day. That's a really big swing. That's a lot of variance and a lot of volatility that you, as the shareholder, have to pay for. I know you don't really understand why do you have to pay for volatility, but you do. No one's going to hold the stocks without expecting a nice return, a nice healthy return when they're so volatile. You can't. You can't. It's not in human nature. And so what happens is people are selling off. They don't want to be in this market. It is a dangerous market and it's very risky. So that was that. Oh, I thought I had other updates. Maybe those were my 3 updates. That's great. So where are we at today? I don't even want to show you my model, but I probably will at the end of the video. So stay watching. We'll get to the model at some point. So yesterday was one of those days when I said just don't trust the bear market rally. I didn't see it. I didn't feel it. And what didn't happen. But if you look at where the market went, the market looked good on energy. Energy was strong yesterday. This I thought was odd. Gambling companies were up. Wynn and Las Vegas Casino, I wonder if they're doing a merger. Qualcomm was up. We love Qualcomm. We've been following Qualcomm. No doubt I love Qualcomm. I don't know about it at this price, but I love the stock. I've been following it now. Morgan Stanley at 78. I've been tracking Morgan Stanley, trying to figure out their exposure, their credit exposure, derivative exposure, their customer risk exposure. I can't figure it out. So they have a support level of 95 that they broke through, kissed it, and then fell. So Morgan Stanley didn't hold support. So let me explain again. The support is the thing that kind of holds up the stock. Think of it as I'm holding it up. Now, all you really do is draw a trend line between the lows. And you can draw them slightly increasing, doesn't matter, but this is as good as any, right? Whether it was 95 or I could have imagined drawing it at 96. So this is support. And it goes up and it comes back and it kisses support. And it goes up and it comes back and it kisses maybe just above support. That's why I said it could be 96, 97. Up, back, back. This time it actually kissed it. Up, back, it closed on it. Up, back, it fell through it. Up, back, up. Crash right through support. So now support at 95 becomes resistance. Because all those people that knew it wouldn't bounce off of 95 knows it probably won't go through 95. So then it came down and it bounced up and it kissed 95. And it went down and now it kissed 92. Tried, got to 93. Down, up to 87. Down, up to 82. Here's a big push to 87. And now we're in the toilet. We're close to 70. Actually, it bounced up to 80. It's a committed downtrend on Morgan Stanley. But we looked and we tried to figure out the credit risk that Morgan Stanley held, and their financial statements were too complicated for us. with a reasonable amount of time and a lot of focus, I couldn't get a sense of whether Morgan Stanley is a ticking time bomb or they've thrown off their risk. And what I remember seeing is the data was foggy on Morgan Stanley, the credit risk data. And then they said things, but trust us. Trust our risk management culture. And I thought to myself, my God, you sound like a used car salesman. No, thank you. I'm not trusting you. That's why I'm reading your financial statements, because I want to know the details, right? So there's Morgan Stanley. I'm nervous about Morgan Stanley. It is the most valuable financial stock out there. And you are playing with fire. I want to say something like, you are playing with fire, baby. But it doesn't sound right. So, what else? The big tech stocks are on a relentless decline as well. In fact, the big tech stocks, let's take a look at the spreadsheet that all of our clients get. They buy our service. Act now. So, you get your ticker, company name, you get the score, the Chicago Quantum Net score. None of these are negative. None of these are better than holding the S&P 500 or all the profit-making stocks. There's not an individual arbitrage out there. Expected returns, these are percentages. The last day volume versus the average. So average volume is 95%. It was a low volume day. So the average volume of money-making, cash flow producing stocks was less than the average of last year. Average day's closing price as a percentage, 88%. The average money-making company's stock, money and cash-making stock, is down 12%, 11.5%. Now, there's a stock in there that's down 93%. There's a stock in there that's up 132%. Wouldn't you like to know? Well, it's easy. You just sort. I'm sorry. Fast Radius is down 93%. Well, I don't even know what they do. Lottery.com is down 84.2%. So let's sort it the other way. Oh, top stock, RCM Technologies, Prophase Labs, PBF Energy, Valco Energy, CVR Energy, Console Energy. It looks like, oh, and then there's Siga Technologies. You know, we discovered Siga. When the monkeypox came out, we're like, hey, I bet that's going up. So, it's interesting. Yeah, and all of these you can sort, which is pretty cool. Now, I'm on a Mac, so I've got it's prettier. Variance versus average close. So this is a normalized variance, and it's a good normalized variance. So you can see who are the stocks with the least amount of risk. Well-Built, Penns Woods Bancorp, Bank First Corp, PCSB Financial, CNF Financial, Bank of Princeton, Ames National, Snap-on Tools, William Penn Bank Corporation. So I'm not... Oh, Red River Bank Shares. You know, I looked at that. That's a Louisiana banking company. So it doesn't surprise me that the companies with the least amount of risk are a lot of banks, insurance companies. That makes sense, see? But then I got Verizon in there. I made money last year when Verizon bounced. What's going on with Verizon? Well, not a whole lot. It's not moving anymore. So it's good to know that you can sort that way. Let's sort the other way. Descending. So Eros Media World, that's got to be a porn site, has the most variance. Grow Generation. The Beachbody Company. I got a Beachbody right here. And on and on and on. Right? And so you get a really good feeling for the market, for what's moving. And then we have average discount. So the way we do average dividend yield, the way we do it is a 1.0 means no dividend. Because we fully negate the impact of dividends on betas in our model. So what happens is a stock, when it pays a dividend, the adjusted price goes down. If I'm a $100 stock and I pay a $5 dividend, the price opens the next day at 95. On an adjusted basis, because it's worth $5 less. So they go back and they readjust prices, previous prices down to account for the dividend. It's like when you split a stock. They go back, Amazon, right? They split 20 to 1. You don't go back and see prices that are 20 times higher. They adjust them down by 20 times. And so we fully account for dividends in our model. We give you back your dividend, basically, in your beta. And you can see NVIDIA pays less than 1%. Apple pays less than 1%. Microsoft pays less than 1%. But Ameriprise Financial, no surprise, manage money, pays 1.7% dividend last year on their actual market price of the stock on average. Then you have market cap, cash flow from operations, long-term debt, net income, common equity, AOCI. Jeff, what the heck is AOCI? Accumulated other comprehensive income. So what that means in English is this is the income that they make that they don't have to put in their net income statement. This is the secret. So why would the IRS and the Securities and Exchange Commission allow them a secret? Why would they do that? So you look, and so if it's all nines, nine nines, then it's if it's all nines, it's a default for a model that our data provider didn't have the data. So all nines means nothing. So that's fine. So Cintas had some income in the AOCI. So that's 1. Up. Gladstone Commercial. That's 2. Aflac. God, I love Aflac. And Amarine. So that's 4 out of 100. Had positive AOCI. Waste Management, $15 million. Those could be things like they found money in the garbage can and they don't have to report it because it's a one-timer and whatever. So this is really dangerous because this gets applied to the balance sheet but not to the income statement. So your price-to-earnings ratios look great, but sometimes this AOCI could even be greater than net income. And so some people like to look at that. Then you have intangible assets. So, you have your common equity, but how much of it is intangible? Right, so Apple doesn't have any intangible. Basically, they don't have anything intangible on their books. Ameriprise Financial, none. Or they're just not reporting them to the reporting agencies in a way that can be reported on. But so this is really good data, and so you can go through and look for stocks that have really poor AOCI. You can also look for stocks that have a tremendous amount of debt compared to their net income, or debt compared to cash flow from operations, because you need to be able to pay off that debt. You can look at market cap with intangibles, all that stuff, and this is good. This is helpful for you. So the next one I'm going to show you is the text one, but we're going to have to talk first. Jeff, you're always talking. Don't talk so much. I had a guy actually come and tell me that I ramble. And I said, you're right. I'll try really hard to script everything out. And nobody liked my videos anymore because I was too scripted. So, where are we with Bitcoin? Let's take a look. Let's do a market scan. We're 20,100. I remember telling you people, I love you people, by the way. If you like the video, hit the subscribe button. It really helps us. We're not paid to make the videos. So when you hit subscribe, it tells YouTube, hey, share the news. We also don't advertise our videos. So what you see is what you get. And I like to respond to comments. I think it's helpful for me and for you sometimes. Drop a comment below. If you're kind of shy about commenting in YouTube, go over to Twitter. We tweet a lot. Right now, we've got the picture there is our game theory picture, which we still believe was one of the things that drove the market yesterday, was our game theory model. Not that we have a game theory model, but that our game theory model actually, we believe, captures some of what's happening, the dynamic. And so, there, look, somebody liked to reply to our tweet. Um, someone likes a tweet. Yeah, like I make jokes sometimes. Somebody said, "Oh, how do you know the market's up? Market's going to be topped." I said, "When Disney buys the empty Strategic Petroleum Reserve for a new underground theme park called the Brian Mound World." It's possible. You know, they can pump over 1 million barrels a day out of that thing. It holds like 254 million. And so, yeah, in 6 months, we could empty that thing out. It'd be great. I think our president's going to do that in order to keep gasoline prices low. So, this guy is pretty funny. I'm going to follow him. So, my Twitter handle, getting back to the point here, is Chicago_Quantum. We are Chicago Quantum. We are U.S. Advanced Computing Infrastructures Incorporated. I am Jeffrey Cohen, an investment advisor representative. But truthfully, we're Chicago Quantum. That's our brand name. Know us, love us as Chicago Quantum. So, Bitcoin's at 20,100. That's support. Flat. You see that? It used to have support at 30. It used to have support at 40. The question is, where does it go from 20? Does it go to 10? I don't know. But when this happens and volume drops, you're building a support level. Remember we looked at Morgan Stanley? Morgan Stanley built a support level between 95 and 105. So let's call it support level 100. And it stayed pretty good there, like 6-8 months. Then it tried to find support at 85. It still might come back to 85. The new support might be 85, down 15%. But when you look at this chart, what do you think? When you look at the Bitcoin chart, what do you think? You think that's a positive chart that's going to rise? I look at it and I think consolidate, rose, but not very long, came down, consolidated on the way down. I almost feel like people are pulling up their money in order to push it in one direction or the other. And I don't know. I thought Bitcoin was mostly traded out of Asia, and I don't know. I don't know if 20,000 is a good price or a bad price. I just don't know. All I know is it's consolidating. And so, don't know. Doesn't help you, I guess. So the Japanese yen is now 136.5. This is really high. This is the highest we've seen it. 136.46. It was 136.45. We wrote it down because we thought it was a big number. The euro dollar at 105.07. Oh, so boring, right? U.S. Canadian dollar at 128.57. I think it's like the same as yesterday. Gold at 1829. We haven't seen movement in gold in a while. I mean, it dropped. It was like 1900, but it's been 1800 for a really long time. Futures. Where are we at? So the market's starting to turn up. When we looked at this morning, it was basically flat. It's looking good, looking higher, right? So that's nice. Market looks healthy, right? Looks like it's going up. The VIX is up. So that means we're up for maybe a little bit of a roller coaster. The bonds are up, which means yields are down. That's a good sign for stocks. When yields go down, the risk-free rate of return goes down, and your expected return required from stocks goes down, and therefore you can buy more stocks. So, but when I look at this, I think, I don't know. I wonder why it's going up. I mean, did the Fed say something? Are they talking about things? I don't know. So, but it's interesting to see it's up 3/4 of a point, 10 years up almost half a point, 5 years up a quarter point, and the 2-year note's about flat. It's pretty symmetric. It's actually pretty... there's probably a Fibonacci sequence in there somewhere. So, net, equities look good. Equities look up. Europe was down. Nikkei was up a little. Yeah, Europe looks down. So let's go take a look at Europe. That's a different it's a different website. I have all these charts to show you. It's great. But you know what? Not a lot of time. Not a lot of time. Yeah, I woke up tired today. There's always so much to talk about. So what I'm trying to figure out is what happened in Europe. So this is interesting. China, Shenzhen, done 2.2% yesterday. That is not good. That's probably a reaction to the U.S.'s drop yesterday. But it's kind of nice when it reverses. So the Hang Seng is down almost 2%. The Kospi's down almost 2%. SSC, another Chinese index, down almost 2%. Actually, it's 1.4%. Now, DAX is down. Nikkei was down. So there's a light on the other page. Jakarta, I hate that. Jakarta's down. I love the Jakarta market. CAC 40's down. Belgium is down. New Zealand is down. Euronext is down. So the whole market, India is down. The whole market took a crap. VIX is up, 28.5. I still don't think that's up. I think it could go higher, but it's a pretty healthy number. FTSE's up. Long live the British. Keep your currency up. So markets were down. Europe is down. Asia's down. So, wait, what happened? I just looked and it was up like 0.5%. Now it's up 0.25% to 1/3. All right. This is not a confident futures situation. So let's take a look. What else do we have here? What else is even worth talking about? There's a lot of crapping out there. Let's look at Koi Fin. They always have a nice nice top page. Makes me feel so professional when I look at pages like this with all this data. It's so much data I can't concentrate. So, equities yesterday. Equities yesterday. Growth fell more than value. Large fell more than small. So large growth did exceptionally badly. The Russell, the S&P, the NASDAQ, over a month, as you would expect, it held its own, and then it dropped into June. You know, they say sell in May and go away. If you would have sold at the end of May, you'd have saved yourself about 8% of pain. Sell in May and go away. There's a reason for that. All right, Nancy Pelosi took communion in the Vatican. That's nice. Just imagine her kneeling down with her mouth open, taking the body of Christ. That's nice. I mean, I think it's great to be religious and all that, but why is that the top market news? And why do I have that visual? You know, her husband was arrested for drunk driving. And she's Speaker of the House. What does that make her? The third in line? Or fourth in line? If the president and the vice president are incapacitated, then I think it's Speaker of the House. Crap, and she's kissing the ring of the Pope there. That's nice. What else we got? Anything? Looking around. I got James Dean. Love James Dean. He's a true artist. I got no news. I got nothing out here. What do I have out here? You know, it's funny. They say you're not supposed to have dead time, but there's no news. Futures are up a little. Let's look at the indices. You know, a lot of times I look and I see, what are the pre-market guys doing? Well, we're up over 20 pesos per dollar. At least that means our strawberries will be a little bit cheaper at the grocery store. The Chinese yuan, renminbi, is down, so they decide to tighten up a little bit. Got Japanese yen at 36.37. That's crazy talk. Euro's not really moving. Canadian dollar at 77.80. Okay. It's about in the middle where you'd expect. I've seen it stronger. The Mexican peso thing, I think, is important. Maybe I'll write some. Maybe I'll do a little bit of homework on the Mexican economy. But when the Mexican peso drops like this, what it makes me think of is that Mexico's going to have problems paying its debt. And then there's a question about what other companies or countries are going to have trouble paying their debt. So let's take a look. These are what I call the walking wounded. These were stocks that had a really bad 3 months, year. I look at Hydrofarm and AMC are down this morning. Tupperware, Coinbase, Grow Generation, and Avaya. We shorted Avaya at $5.01. We shorted more of it at $5.08. It's now $2.39. We made a video about how Avaya was just a terrible investment. Still a terrible investment. I wouldn't buy it at $2.39. But up is AutoWeb. You know, I do hope it's good little company. I do hope they figure out what they're doing. They're undergoing a strategic review right now. They may have to shut down. They just basically ran out of money. Bird Global was a $10 SPAC, which is now 47 cents, and they make and rent bicycles and those motorized scooters, and you can buy the service from them, and they charge a click fee every time somebody rents something. Just other downtrodden names. You know, Party City is one that we understand because we have a Party City near us. Freeport McMoran we understand because we like copper, and Cleveland Cliffs we understand because we like steel. Summit Midstream Partners we love. It's a master limited partnership. ATI Physical Therapy is a solid hands-on business. Tip your waitress. She or he will be here all night. And we like Rewalk. Rewalk's not moving. So lots of little stocks to look at, but in general, not a lot of movement, right? No direction. These are banks where the prices should rise because they're expensive banks. They are lush in their valuations. Price to book, all above 1, except for Carver Bancorp. What happened to Carver Bancorp? Oh my God, did that fall? Woo! All right. I don't know what happened to them, but in general, banks aren't trading. You got 2 up, 2 down. I wonder if people are on vacation. High beta stocks, we updated our list. Pre-market on the high betas. Mixed. Negative, but mixed. Some of those high betas are up. That's interesting. Not by much, though. And the declines are larger than the ascents. Let's look at the money managers. Where are we at? Six down. Some of those names we like Franklin. We like Franklin. We like the management Franklin, I should say. 11 up. That's a disturbing picture. B. Riley. Morgan Stanley is up 0.7% this morning. All right. I swear I don't understand this market today. Specialty retail. It's almost like it's bifurcated. Bed Bath & Beyond down 15% this morning. You know, that looks like a run on the banks on Bed Bath & Beyond. I'm guessing those bath bombs and those soaps, they're just not selling. You know, I love a good bath bomb. I just lay in the tub with the frothy bubbles. By the way, I never use that stuff, but it sounds nice, right? Lavender smell. Ah, so beautiful. Bed Bath & Beyond. And then Petco's up. Abercrombie & Fitch, Urban Outfitters, Victoria's Secret, Ulta, TJ Maxx, Whirlpool. So interesting in pre-market. You've got some strength there. You know. So I don't know. I think it's a story day today with like a Bed Bath and Beyond. I think that's worth looking at. All right. So like net, do you look at this market and you think, I don't know where to go? I mean, some of the Bitcoin miners are down, but then Steel Dynamics is down, a small kind of innovative steel company. ArcelorMittal is down. But then you look over here and you've got U.S. Steel is up a little, right? Silver's up a little. All right. Freeport Momo, McMoran. Cleveland Cliffs under $16. Yeah, the problem is it could go to 10 easily. So this is where the output of our model becomes a little more helpful. So Jeff, what's your model telling you? Well, the first thing it tells us is I gotta make that bigger. You can't read that. Where do I think you are? Superman with laser vision? There we go. So the variance of the S&P 500 is 1.57 times 10 to the negative 4. It just keeps going up. And the returns just keep going down. S&P 500, excluding dividend, down about 10%. This is not from the high. This is just from where it was a year ago. Russell's down 25%. NASDAQ is down almost 19%. The risk-free rate is up, which means market return. Expected market return, including dividends, if you hold a fully diversified portfolio, is 3.5%. That means if you find a stock with a 5% dividend, the price is going to go down on an expected value basis. That's not helpful. It's not helpful. So I got to make this smaller because I don't want it to wrap. So what we do is we check the market cap and we look at all the companies that don't have a market cap in the data. It's not many. And then we give those back to our data provider. And then we check to make sure all the companies are domiciled, incorporated in the United States of America. We want our model to see Visa. We want our model to focus on USA businesses. We're not picking Chinese stocks or Mexican stocks or any stocks. We just want U.S. stocks, okay? That's what we want. 2015 companies made the list. Make a profit. Positive cash flow. Trades above a certain price point, about 35 cents. Under $10,000, so that we don't have weird stuff in there. Positive beta. Traded every day. At least 1,000 shares. In fact, the smallest volume is 4216 shares traded in a day. So we look at this. If you bought all of your stocks, all 2015 stocks, your expected return is 4.25%. Your variance is 1.606 times 10 to the negative 4, which is just a hair worse than the S&P 500 ETF. So it's actually better just to hold the S&P 500 ETF from the perspective of variance. Okay? But the expected return is probably just a touch higher. That's not helping me. I don't get anything. Now we look at the 50 stocks with the best Chicago Quantum Net score. Amphenol, we don't know. NVIDIA, Apple, Microsoft. So if you were a client of mine, you would realize those names don't show up at the top of this list. This is normally like dog shit stocks. We pick small, crazy stocks, right? We pick Mara and things like that, but not anymore. Now we're picking Apple. Who does that? Our model works for 6 hours at night, and then it comes back and it says, if you can only buy one stock, buy NVIDIA, buy Amphenol, buy Apple, buy Microsoft. I can't believe I'm saying this. I mean, this is like, it's crazy. Well built. You saw well, but we talked about it before. It had almost no risk. BlackRock. So none of these are a portfolio. These are individual stocks, right? It's just nice, though, because you could do a whole lot of research on individual stocks. These are the worst scores. Troops, Forge Global Holdings, The Real Brokerage. My guess is that's a real estate brokerage, mortgage brokerage. Probably not very good now. It goes on, right? Volume, yesterday's volume versus the average for the year. Yesterday's volume, this one traded 2,400% of last year's average volume. Portland General Electric Company. What is going on with them? POR. That is probably a stock to look at. So, Jeff, what happened at POR? Let's take a look. This time we're going to go to a different site. We're going to go to MarketWatch. Corbis is the worst thing that ever happened to me. POR. Portland General Electric. Let's look at it over a month. And you see it was up $50 and it hit 45 and it's 49.50 and then 48.80. So the price isn't moving. Let's look at the options. July options, like basically none traded. August options, none traded. I mean, not none, but a couple thousand shares worth. Got a few calls at 50 in September. So, and a few calls later in the year. So I have no idea why Portland Electric traded 16 million shares. I don't know. What a great question, though. So if you bought our model, you'd have this the night before. You could do your homework. You could be like, hey, Jeff, I got a tip, man. Portland Electric is in play because it traded 16 million shares, which is 24 times average volume. Okay, that's cool. And there's lots of those stocks. Nike, 452% because they had earnings, which were okay. But stocks dropped like crazy. NKE. Jeffrey, tell me about NKE. This is what happens is you start to see these stocks over and over again. I saw when Nike had their earnings. And I saw how suddenly it popped up in our model. $102. This was like a $150 stock, I thought. Yeah, 175. It was a $175 stock. It's down to 100. This thing is cratered. I'm so sorry for long-term holders of Nike. But it cratered because the consumer, we're heading into a recession potentially. And if that happens, no one's buying Nike Airs or very expensive workout clothes. They're going to wear the same old ratty t-shirts that they had, and that's going to be fine. So we ran our model. I mean, this isn't that helpful. I'll scroll through it for you. We have different solvers we use, and it picks different methods. And so like here, an unseated Monte Carlo run, which took 540 seconds, picked Carlyle Group, ServiceNow, and B. Riley. It's not by far your best outcome, but not a bad outcome. The genetic algorithm in 1,400 seconds picked what is actually the best portfolio, which is, it's interesting. So it's AMD, tech stock, BX, which I believe is Blackstone, Coinbase, Dillard's, EBIX, I don't know. Melli is, was that Mercado or Mercado Libre, I think. Yep. I never heard of it. It's like $300 stock. NVIDIA, Silvergate, SI Time, and the Trade Desk. And that negative 0.0025 or negative 2.5 times 10 to the negative 4 is it's about half of what we would expect the score to be. So it's half the edge. And you're buying a lot of dog shit there. I mean, that is some really risky, nasty business. But you hold it together and it should do fine when the market goes up. And then we run a simulated annealer, reverse simulated annealer on it. So we simulated anneal it in reverse. Then we run a genetic algorithm on it again to try to find any kind of permutation. And we say that this is now an equilibrium model because it was found in an original solver. And then we hit it really hard with two different methodologies, two different heuristical solvers that came out. So those are your stocks. Well, I'll show you how we do it. We go I gotta get my daughter down. She's got to go to camp today. Current efficient portfolio. Let us make the update. Now you know what we have to do every day. So Marvel didn't make it. Farfetch didn't make it. Block didn't make it. TNA. By the way, I love TNA. I'm going to keep that in there. There's a very good risk versus return. So STTD, SITM, SI, NVIDIA, Melly. EBIX. Got to add EBIX. DDS. Coin. Got to add BX. And AMD. And then got to take out Max Linear. So you know what the question's going to be. The question's going to be, how is this portfolio doing pre-market? Because those that are kind of in the biz have models like this. And you can see pre-market, these are down or flat. So what I would say is, yeah, I'm not surprised. S&P 500 futures have gone negative. NASDAQ futures have gone negative. Russell futures have gone negative. And you can see it just by looking at a couple pre-market stocks that are model picked as being risky, but with counteracting risk so that you have the minimum amount of risk in your portfolio. So we'll track that through the day. We also show you some different things. We have positive and negative skew stocks. So we haven't come up with a thought process on skew. We do have a very strong process on leptokurtic and low variance and platykurtic and high variance. If you want to ride the rocket, Laredo Petroleum, PBF, AgFi, and ROCC. And then there's other stuff. Here's a whole bunch of model iterations. If you wanted to stay around that edge of 2.5, you can go as many as 13 stocks. So if you wanted to go to the 13 stock model, which may not be bad, you know, it's a little less risky when you hold 13 stocks than when you hold just 9. To be honest, I do like going a little larger myself. So now we add MXL back. We add Riley back. And we add Surgery Partners back. Yep. How we looking? Pre-market, it's interesting. We added one positive. All right. So going to 13 is going to help you. Now, in terms of the high beta stocks, we updated this a couple days ago. The high beta stocks are now dramatically lower. So what this is telling me is it's not a good day in the markets. At least it's not a good open. This will not be a good open in the market. I'm sorry for anyone who's long today. You're probably going to have a rough day. VIX is up. The sensitive sectors are down. There's another sensitive sector, chips and semiconductors. Yeah, that's all red except for one green. So it looks like it's it's still hemming and hawing out there. The walking wounded, we're going to put them out of their misery? No. Some people are bottom fishing. Auto Web may not be a bad deal at 38 cents and a quarter a share. I like Auto Web, the business. I like their Securities and Exchange Commission filings. I like listening to the earnings call. This could be a play. The problem is it probably goes bankrupt. It probably just dissolves, right? I mean, you lose it all. $100,000 worth of the stock traded yesterday. It's not a fast mover. Could be an interesting play. How we doing on cannabis? I made a joke yesterday on Twitter. How we doing on cannabis? So tobacco's down. So we looked at Philip Morris's tobacco. Philip Morris Tobacco, Mo. Now we looked at Mo, Altria. It's down 3.6%. We got to talk about this for a minute. MO. Let's go back to the spreadsheet. MO. Altria. There it is. Altria Group. It's worth showing you. So I have Jeff's spreadsheet. How do I use it? Jeff, how do you use your spreadsheet? Let's look at Altria. So I look at it and I say, all right, scored like 754 out of 2,000. So it's in the top third. Not bad. It's down 9%. Not terrible. Variance, it's hard to tell. Dividend yield, 7.6% on last year's average price. Market, these should be dollars. I should fix that. Make it a nice currency. All right, so. Give me the 1,000 separator. Come on now. There we go. So things trades at $78 billion, $78.2 billion. Cash flow from operations is 8.4. So you make your money back in less than 10 years, about 9 years. Long-term debt's $25 billion. That could be a pretty big stone around their neck to carry. Net income, $2.5 billion, but their common equity is negative. So you buy the company, there's nothing behind it. AOCI is negative. The AOCI at $2.96 billion is greater than the net income of $2.45 billion. So in fact, they lost money. They lost money last year. Wow. Maybe that's why common equity is negative, because there's losses. And they have $12.2 billion of intangible assets. That does not make sense. So they have $1 billion negative of book value, and they have $12 billion of intent. So Altria is just running on cash flow. Altria is a smokescreen. That was the worst pun I've ever made. Altria sells cigarettes because they have intangible assets and because they lose money off the income statement, AOCI, and they lose more than they make. It's a smokescreen. All right, you heard it here. So, what else? So, Jeff, show me that output again. What else you got in there? Well, let's just go to the bottom, because that's kind of interesting stuff down there. I love the bottom of our model runs. Sometimes my favorite part. So, stocks that split. Eros Media split, reverse split 20-1. Probably to stay above $1. These are all companies that had volume spikes. These bank spikes all happened on like June 6th or something, there was some day or July or something when all the banking companies had a big day. So either somebody bought or somebody sold all the banks. I don't know. Trian Insurance Group fell 0.72 as a multiple of E. Um, these guys went up real fast. Like Avis, you remember, was a big dealio. But the real brokerage went up. That seems like a scam, actually, that it went up so fast. These are beta stocks. Low beta, Provident Financial Group, Questar, Strat Tech Security Corp, Codoris Valley Bancorp, and Kellogg's, right? Because Tony the Tiger. Here are the stocks with beta values outside the data validation range. We have some really interesting short plays. There's a VIX short term, Ultra VIX short term. There's a US dollar, which moves opposite to the stock market. There's just a bear 3x shares, direction, TZA. There's a pro shares, ultra pro short. So, and then there's the gold ETF. So those are synthetic bets. Synthetically, I trust Goldman Sachs has a warehouse with physical gold in it. And I want to buy a piece of that action because it moves against the market. It kind of keeps me safe. But these are synthetic investments, pro shares, VIXI, UVIXI, synthetic, UUP, US dollar index, direction, 3x bear, ultra pro short QQQ. So I don't play those. I think they're dangerous. But some people do. It's I gotta tell you, right? If you feel lucky, punk, you want to get some of that, synthetic meth that's going to have 3 times market movement. I'm shivering when I think about it, how crazy that is. And then last but not least, there's big dividends. So here's how you use it. You go through, you kind of troll for different things, and then, like what we did, then you make your list of stocks that you might be interested in. You're like, oh my God, the Mexican peso. So anyone in Mexico who exports to the U.S. is going to export more to the U.S. More. 20.1 pesos to the dollar. You're a rich man in pesos. You make more pesos. So maybe I want to buy like CMEX, some kind of Mexican export company, right? That's interesting. So you look at the different, indices, right? You could look at our current efficient portfolio and say, come market open, 3 are up, 8 are down. S&P futures are flat. What this tells me, though, is some of the bets are on momentum down. High beta stocks, pre-market. Oh, yeah. Momentum down, right? Somebody big is making bets that the market's going to go down, but they're propping up the futures or not making the same bet on the futures. I can imagine a bunch of portfolio managers sitting in a room saying, what's Cohen saying now? Oh, he's saying this and that. So let's get the program where we sell all 50 of those. The crap stocks. Sell pre-market. And we're just going to put that in and we're going to buy it back later in the day, right? Let's make 5% a day. Come on now. And so they've started moving on these. These are like your dogs, right? Or maybe they want to go after the walking wounded. Party City, Tupperware, AMC, Coinbase, Grow Generation. It's always good to beat up on Grow Generation. There's no one there to support them. Look at this stock. By the way, I love the business of Grow Generation. I do. I'm probably going to go long this stock at some point. But I'm still not sure $4 a share is the right price. So we do a weekly. Look at that. It's like a slide at my kid's park. It just ends up on the ground. But you still have another $3.69 to go down, so I wouldn't be in a hurry to pour my money in this thing. But wow. They have like 60 stores. They're beautiful stores, too. And I don't partake. I don't smoke anything, by the way. No cigarettes, no drugs, no pills, no nothing. None of that weird stuff. I do drink coffee, though. And I occasionally have a glass of wine or a shot of whiskey. I do like my whiskey, by the way. Actually, I like it a lot. I like rum, too. Dark, like an old cask-aged rum, dark rum. Love that. So, but don't smoke. But, you know, if you want to do hydroponics, grow generation, hydrofarm, right, they're good. But hydrofarm hit an all-time low yesterday. HYFM. Look at that weekly chart. Bam. Probably going to go back up, but when? If ever, right? Because these stocks, they're all relying on this. So this is a 1 week interval S&P 500. So you see how when it went up, oh, was it beautiful. Now it's down. So what it looks like is going to happen today, and by the way, the volume yesterday was tiny, teeny, tiny. So what that tells me is we're heading into the summer. Not a lot of volume. You're not going to count on anything being pushed up. But it wouldn't surprise me if this thing touches the line again, maybe the next couple days. That basically calls it at 3,600, 3,590 for the S&P, the S&P 500. So I guess I'm calling another 10% drop, 8% drop to come back to that trend line. If we believe we're in a downtrend and this is the right line, you're down 10%. So good luck in the markets. Be safe. If you know that the trend says the S&P 500 is down 10%, then all your risky stocks probably aren't going up. Corbis probably isn't going anywhere. The banks, the cannabis, Bed Bath & Beyond, Carver Bank Corp, Rewalk, ATI Physical Therapy. I just can't imagine anything's going to have a lot of support. Cleveland Cliffs, Freeport McMoran, Party City. It's basically just walking wounded because there's not a lot of volume. You've only really got conviction plays. And there are people that their job is to keep fully invested. And so you've got to be very careful because they have to be fully invested. They could move the market while everyone else is resting. I want to thank you very much for watching. Jeffrey Cohen. See, and we did the demo and we worked it in. You can see how if you had the model and if we ran it for you every day, you'd have all the spreadsheets, you'd have all the data. And we have a down run as well, which shows you all the stocks that lose money. A very, very different dynamic. Those are much higher risk. So, all right. Thanks again. You take care. Bye-bye.